I think what it shows is that the new all-time high in gold is being confirmed in silver because we've got a new, let's say, 3.5 year high or so in silver. And that's why I think silver can move very quickly to confirm the all-time high in gold. But in terms of all-time high in silver, and we know what that price is, it's $50. So I don't think it's going to take that long to get to 50. I know it's taken a long, 3.5 years almost to get back around 30 and above 30. But I think things are going to really accelerate.
After a relatively slow start in the first quarter, silver is making a significant move, trading at an 11-year high and outpacing gold. This upward momentum in silver is dragging other precious metals higher as we head into the weekend. Analysts note that the white metal, which lagged during gold's breakout rally earlier in the year, is now in the driver's seat. Silver has surged above $31 an ounce, its highest level since February 2013, with July silver trading at $31.635 an ounce, up 4.65% on the day. This remarkable performance sees silver up more than 10% for the week, marking its best performance since early April. Famous analyst Mario Innecco believes that once silver surpasses $30, it could quickly escalate to $50, possibly within a few months and likely before the end of the year. Gold, meanwhile, has also seen a solid push above initial resistance levels. Some analysts predict it will return to record highs sooner than expected. June gold futures last traded at $2,414.60 an ounce, up 1.34% on the day, with nearly a 2% gain for the week. Mario notes that the rise in silver prices and gold signals broader economic shifts. Looking back over the past 40 years, he highlights the significance of the recent breakout in gold, suggesting the beginning of a major trend. This surge in precious metals is encouraging for investors who stack gold and silver, but also indicates a troubling devaluation of paper currencies. This devaluation reflects a return to economic fundamentals, where paper currencies are recognized for lacking intrinsic value. Until recently, central banks relied on quantitative easing and money printing strategies to maintain currency strength. However, Mario observes a turning tide in the bond market, causing currency values to decline. This shift exposes the illusion of wealth accumulated over recent decades, prompting a movement towards tangible assets like gold, silver, and other commodities. We will present clips from Mario Innecco's interview with Liberty and Finance. But before we do, if you want more videos like this, please hit the subscribe button and turn on the notification bell for more updates. Thank you, and enjoy the video.
Not surprised because the last couple of days, silver got pretty close to that level. And I think it was just a matter of time. And the other thing I was watching was the premium with the Shanghai Futures Exchange. And I think silver closed today at $32.95 equivalent. So the price now has been set in the Far East. And this 30 level, of course, is just like the beach ball getting out of the water, popping out. That's where the line was. And we got up to 30.83 this afternoon in the spot price. Right now we're at 30.63. And gold as well is at 24.15, so it's back above 2,400. And I think what it shows is that the new all-time high in gold is being confirmed in silver because we've got a new, let's say, 3.5 year high or so in silver. And that's why I think silver can move very quickly to confirm the all-time high in gold. But in terms of all-time high in silver, and we know what that price is, it's $50. So I don't think it's going to take that long to get to 50. I know it's taken a long, 3.5 years almost to get back around 30 and above 30. But I think things are going to really accelerate. Data-wise and reason for this happening, I don't think there is much. One thing, though, I would say, geopolitically, the meeting between Xi Jinping and Vladimir Putin. Vladimir Putin flew to Beijing yesterday. I think it's very significant. It's showing that Russia and China are both behind, each other. And it's a strong message to the West that they're going to do everything to move forward with their alternative multipolar world. And I think this is reflected in the precious metals a bit, because it means a weaker dollar going forward. If you look back 40 years as well, gold is, this breakout in gold is very significant. And I think we're just in the beginning, and silver as well. So it's all very encouraging for us, stackers of gold and silver. At the same time, though, it's pointing to the fact that our currencies are becoming worth less and less, which isn't a great thing for the majority of the public. They did well up until recently because the central banks were able to use this strategy called QE, or money printing, and people bought into it for the last 15, 20 years, and it helped keep money cheap, helped keep the currency strong, because the bonds that backed this currency, the government bonds, the debt, were always going up and up in value, and the rates were going down. But now everything's turned, in my opinion. And with the bond market turning, that means the currency is turning down. And like you said, a lot of the so-called value, not even value, but the phony wealth that's been created over the last 30, 40 years, a lot of that is going to flow into real things, and I think real things like gold, silver, commodities have been heavily undervalued. And it's just a rebalancing, like you said.
As the BRICS nations, Brazil, Russia, India, China, and South Africa, unveil their groundbreaking gold-backed trading currency, the upcoming BRICS meeting in Russia gears up to prioritize the de-dollarization agenda, aiming to reduce reliance on the U.S. currency in cross-border trade. BRICS is actively exploring strategies to diminish the dollar's prominence in global corporate transactions. In a recent interview, Sergei Ryabkov, Russia's deputy foreign minister, disclosed that the de-dollarization agenda would take center stage at the 2024 BRICS summit. He emphasized that the alliance would strengthen post-summit, propelling developing nations into a whole new ballgame, marking a significant moment for the summit. As BRICS transitions from the dollar, renowned investor Robert Kiyosaki foresees hyperinflation and a looming depression in the US, highlighting precious metals, Bitcoin, and hard assets as the only viable investments. Mario doubts the United States' ability to fend off the growing influence of BRICS nations and uphold its status as the primary global reserve currency. He highlights concerns about the US's fiscal and monetary policies, which show signs of strain due to mounting debt and economic hurdles. Moreover, the US's declining industrial base diminishes its competitiveness against emerging economic giants. These factors cast doubt on the future dominance of the US dollar in the global financial arena.
There has been a long-term plan to go off. The bankers want to control everything. So you have to first you start with gold and silver coins, which they don't have total control over. So how do they stop that? Well, they stopped it, about 100 years ago with World War I, World War II. They racked up a lot of debt. They took off gold and silver off circulation, but they allowed you to still keep these promissory notes, which were for gold and silver. And people think nowadays that that's a good thing because you have privacy, and to some extent they do. But now they want even more control. They want to get rid of these empty promissory notes and have nothing. So, it could be that it's a plan and that they're going to try hard to implement it. But I think a lot of people are waking up. 20, 30 years ago, if they tried this, they couldn't really try because the system was still very stable. But now with the internet, with everyone, me talking to you, you are in the States, I'm in the UK. You can talk to people all over the world. People are waking up. So my hope is that, they might try to bring in CBDC, but it will be a big failure in my opinion. It's a little bit like when they had the French Revolution. They brought in the assignats, and when that was just about failing, they tried something new called the mandat territorial, and that didn't even get off the ground. It collapsed almost as they issued it. So that's my hope. People will wake up and say, why should we listen to these central bankers who destroyed the last system? And now, why should we, accept their solution to what they did? Well, I think the BRICS are just like a symptom of what the bankers and Wall Street and big government have been doing, but not, it's a international reaction, not a domestic one. So I'm not even sure that the United States can stop the BRICS because, the U.S. has gone so far in extending itself fiscally, monetarily, and the economy in the U.S. as well. They've exported all the industry to China and a lot of other countries. So I think it's too late. And we've seen that what they've tried to do with their allies in vis-a-vis Russia and the Ukraine is totally backfiring. So, and for the American people, actually, I think the best thing long term is for the central government, the politicians, that the deep state to fail, and it will be painful, but longer term it will be the best thing. And I would say cooperating with every country in the world and trying to trade with them peacefully is the best thing. So, yeah, I don't think the U.S. will be able to stop BRICS. And because there's so many countries that want to join, and it's like snowballing.
Silver's recent bullish trend indicates a looming surge, potentially propelling it toward $50 amid a market teetering on the edge of a major short squeeze. As investors navigate this volatility, they reevaluate portfolios to safeguard against currency devaluation. This pivot towards precious metals and commodities underscores a broader reconsideration of traditional investment approaches, with tangible assets emerging as key stores of value in today's uncertain economic climate. Share your thoughts on Mario's prediction in the comments section below. Also, ensure you like this video, subscribe to the channel, and turn on post notifications for more videos like this. Until next time.